For 5 straight months, the U.S. housing market was doing one thing, and then in June it did the exact opposite. From December all the way through May, the U.S. median home price was declining. It was looking like we are finally seeing the beginning of a real downturn. But then June happened, and the trend just broke. What caused this sudden, unexpected reversal? Was the downturn really averted? Or is there something else going on beneath the surface? In today's video, we're going to dive into the latest Redfin data and break down exactly why June's numbers flipped the script on the U.S. housing market's trajectory and what it all means for you. Let's get into it. Welcome to Real Estate Watch, the channel that focuses on forward-looking real estate and economic analysis. My name is Eric, professional economist and licensed real estate agent. Let's get right into the latest housing market data and see what's going on. According to Redfin, a national real estate brokerage, the U.S. median home price in June was $432,000 on a seasonally adjusted basis, which was down from the December peak of $436,000, but up from the $430,000 in May and marks a break from the prior trend where the U.S. median home price had declined for 5 consecutive months. Now, you might think that I'm slicing hairs here as the differences are just a few $1,000s. When you're dealing with a transaction in dollar values of hundreds of thousands of dollars, what does a few thousand matter? If we're just talking about one transaction, it doesn't really matter that much, but I like to focus on trends over time because they help us to understand what we can expect in the months ahead. The trend over 5 months was a declining U.S. home price, and that trend just broke. Now we need to assess why it broke and if it means a reversal of the trend that was in place. This is especially important now because we could be in the beginning of a major shift in the U.S. housing market because of how unaffordable homes have become for the average buyer. First, let's look at why the U.S. median home price increased in June. For that, we turn to the underlying supply and demand data to see what's going on. The increase in the median price didn't come from an uptick in demand. That has been weak and continues to get weaker. Home sales remain at historic lows, a reflection of the frozen nature of today's housing market. The sales to list price ratio, which is a good metric for the intensity of demand, has continued to head lower as it has the last few months. The homes that are selling are sitting on the market longer and longer. The average days on market notched a new post-pandemic high and shows no sign of reversing course. If the increase in the median price didn't come from an increase in demand, it must have come from a decrease in supply, and that it did. New home listings took a sharp turn lower in June, putting it at the lowest level since October of 2023, and was the 3rd consecutive month of lower new listings. Without a supply of new listings replenishing the inventory that is selling, we get a lower overall supply. We can see this in the month supply of homes, which measures how fast the market inventory would be exhausted at the current pace of sales. It's the decline in new listings the last few months, but especially in June, that has caused the U.S. median home price to break the trend of the 5 months prior. Now for the big question, should we expect this new trend of tightening supply to continue and put upward pressure on prices in the months ahead? Or is this just a blip on the radar and something that won't continue? Given everything I'm seeing, I'm going to go with the second option, and that is because there is a source of pent-up supply that can come online. Let me show you what I mean. Here's home sales over the last 10 years. You can see before the pandemic that home sales were right in the 500,000 to 550,000 range and fairly stable. This is what a healthier housing market looks like. The 5-year average before the pandemic from March 2015 to March 2020 was about 520,000 home sales per month. Now, there were a lot of market distortions that took place as a result of the pandemic. There was massive fiscal and monetary stimulus from the government and Federal Reserve. There was the work from home phenomenon. There was the initial drop in interest rates as the Federal Reserve tried to rescue the economy at the beginning of the pandemic, and then a sharp rise in interest rates as a result of their fight against inflation that sent mortgage rates to their highest level in decades. If the pandemic had not have happened, and all these market distortions never happened, it is reasonable to assume that the housing market would have continued to average around 520,000 home sales a month as it had before. So we can calculate what the potential supply would have been in that counterfactual. Assuming 520,000 home sales per month since March 2020, the potential amount of home sales that might have happened if we hadn't experienced the pandemic and resulting housing market distortions is 32.76 million as of June 2025. Now, we can compare that with the home sales that actually did happen over that same time period, which comes to 31.1 million. If we subtract the actual sales from the potential sales, we get an estimate of the potential pent-up supply of about 1.66 million housing units. That's not a huge pent-up supply. It's just a little over 3 months of the pre-pandemic average sales of 520,000 per month, but it's not insignificant either and represents additional supply that can come online in the months ahead. This, combined with the fact that new listings continue to trend below the pre-pandemic average, leads me to believe that we can still expect supply to rise in the months and year ahead. Given the weak state of demand, an increase in supply will likely lead to a continuation of the downtrend we have seen in the U.S. median home price before the June data came out. Now let's get to the more practical side of things. What does this all mean for you? Whether you are a home seller, a buyer, or an investor, it means something different. A quick disclaimer first, while I am a licensed real estate agent in the state of California, I'm not your real estate agent, and anything I say here is just my opinion and is for informational purposes only. You should always consult with your own real estate professional before making any real estate decisions. Now, assuming the downtrend in prices does continue and June was just a blip on the radar, it means that sellers are looking at their window starting to close for getting top dollar on their home if they want to sell it. If we are in the beginning stages of a larger market downturn, you're not likely to get a higher price for your home than it would sell for right now. If you don't want to sell for less than what you think you should get for your home and you're in a situation where you can wait it out, you may just want to sit tight. But for the next 6 to 12 months, there is much more downside risk than upside potential for home prices, at least at the national level. There can certainly be different circumstances in regional markets across the country, so again, make sure to consult with your local real estate agent for the trends in your regional market. For buyers, especially for those on the sidelines, you may get some relief on the purchase price in the months ahead if things play out the way I have suggested in today's video. Unfortunately, mortgage rates are not likely to come down noticeably in the next few months, so hopefully lower prices can help get you back into the market so you can make some offers again. For investors, this is a good window for making purchases. Given the weak state of demand, there isn't as much competition for the current inventory, and if you're able to make all cash offers, it puts you ahead of buyers that are struggling with financing at 6.5 to 7% mortgage rates. And with sellers facing the reality that they may need to make concessions to get their homes sold in the current market, it puts you in a favorable position to get a deal on your investment. The downside, however, is when you turn around to sell the property again, there is the real possibility that the market could be softer. Make sure to consult with a real estate agent familiar with the regional market you're looking at to help you assess the deal and what your specific local market might look like down the road. Whether the June break in the previous downtrend in price continues remains to be seen. We have to assess the data each month as it comes in to see how the trends are shaping up and what it means for the months ahead. What do you think? Is there more downside or upside potential for home prices in the next 6 to 12 months? And what do things look like in your local market? Let me know in the comment section down below. If you want to stay up to date on the developments in the U.S. housing market each month, make sure you are subscribed to this channel and click that notification bell down below so you won't miss my next video when it comes out. And if you liked today's video, don't forget to hit that like button on your way out to support the channel and help it grow. Thanks for stopping by. I'll see you in the next video.